Indicating who better than Gautam Shah from Goldilocks Global joining in to talk about all of that and more. Gautam, hi, good morning. Great to have you on ET now. Gautam, what should we start with? Let's start with IT because that seems to be having a more bearing on the market than anything else. What is your sense, Gautam? Because, I mean, these are kind of levels that we've not seen in the last 8 years or almost 10 years, right? Decadal kind of moves and inflection points that we're currently sitting on for the Nifty IT index and individual stocks. Is there a case for rebound? And do you sense that they're anywhere close to bottoming out?
Good morning. Well, when the market fears something, it reacts immediately. I mean, I remember the COVID period, while COVID was setting in, the markets, we had the fastest bear market in history in about a month. So the market reacted to the event that was unfolding. I think something very similar happened with the IT sector. I think we've been very vocal about it in the last couple of quarters, that this is a sector you need to stay away, because we felt that there are clearly problems in terms of valuations, in terms of AI disruption and all of that, which is being debated today. But actually the chart saw it a couple of quarters back, and we continue to maintain a bearish stance because I believe that this is something that is structural and this is going to continue for maybe a few quarters ahead. So I don't see this underperformance ending anytime soon. And the problem is this will put big pressure on the Nifty and the overall market. Yesterday was a sort of a mini climax, and therefore you are seeing a bit of a rebound today, but these rallies will not sustain, and I think they will get sold into at higher levels. And mind you, even after such a big fall, many of these mid-cap IT stocks are still trading at very, very rich valuations, because I think a lot of analysts wrote the Excel sheets today based on what could happen over the next 5 to 10 years, and those Excel sheets have got disrupted with what AI is doing to this world. So given the chart setup, I would still be negative. But on the overall market, I wouldn't be so negative. And I think there are a lot of pockets that are doing well. And I think one should just focus on the same.
But Gautam, purely because of the weightage that IT has on the index alone, do you sense that, while banks, capex, and many other sectors may actually outperform, just that seesaw and the bearing that IT has on the index will keep the index abated?
Absolutely. That's exactly the point, because you have Reliance, which is 12% of the index, and the IT index, which is obviously a very large part of the Nifty. So when you have that kind of an environment where two major pockets of the market are underperforming, you can't expect the Nifty to do well. So my stance has been very clear for the last couple of months that we will go nowhere on the Nifty. There will be rallies, we will find resistance, there will be dips, we will find support. Why? Because there is domestic liquidity, and global equities are in a massive bull market. So we will not break out or break down. That's the problem for the Nifty. But if you look at select pockets of the market, PSU banks at lifetime highs, metals near lifetime highs, energy at a 52-week high, there are various pockets of the market that are still doing well. And if you were to be in those pockets, this market is actually very comforting, which is what we've tried to do at Goldilocks. So I think this bipolar kind of a situation will probably continue for the rest of the year, where Nifty does nothing but stocks will do well.
Absolutely, Gautam. It's been a rotational trade. But talk to us about what the next leg of that rotational trade will entail. What happens with regard to PSU banks, metals, energy? Some of them have hit 52-week highs. Can they continue the kind of run that they're having? Do we see a pause among these three? What's your take?
I saw the 2003-2008 bull market when the Sensex moved from 3,000 to 21,000. It happened in about 5 years. In that period, when FIs went away, nothing worked. Everything collapsed immediately. Thankfully, because of domestic liquidity, because of that 30,000 crore SIP money that keeps coming in, and which is clearly a revolution that is here to stay, there will always be some pockets in the market where money has to flow in and money has to hide. Look at what metals have done. I mean, the ferrous side is now starting to do well. Non-ferrous did very well in the last 6 months. And I think there is much bigger upside, maybe another 15 to 20% upside for the metals index. But the sector that we have been really pushing to our clients for the last couple of months is PSU. The entire basket, PSU Bank, PSU Power, PSU Infra, some coal-based stocks. So I think this is one space that can deliver 25 to 30% upside, and this is where money seems to be hiding. And this is the value side of the market. The last 3 years was all about growth, and growth is not there, is what is being debated about right now because of India's valuations and all that's happening. But I think the market is giving a lot of value to value. And in that environment, you want to be in stocks where the PE range is somewhere between 8 and 20. So I think PSU, energy as an entire basket, metals as a basket, financials as a basket are spaces that obviously we like. And that's where money is flowing in.
Gautam, shifting back to IT, I'd want to know, and I'm curious to know, where do we see a bottom? What's the kind of range that you're looking at? Where will IT bottom at?
This reminds me of the age-old saying, do not catch a falling knife. I think a lot of people have been trying to find that bottom in the last 3 months. And I think there are just no signs of any positive triggers on the charts. 31,000 on the index was an important support, which broke yesterday. I think today we are somewhere around it. But I do believe that this downtrend is going to continue. We could see a level of 28,400, and I would not be surprised even if we go all the way down to 26,000 if you are looking at a more 12 to 18 month kind of a view. So honestly, don't spend your time in the IT space. All the charts have got disrupted. You will have rallies from time to time, but they will just not sustain.
You said energy. There is a 30% upside from here within the PSU energy basket. If I can combine those two themes and stick to probably your high conviction calls, give us your take. What are the top 2-3 calls within that basket that you have? Or do you believe that the full basket moves 30% and you just kind of buy the entire basket approach and ride the wave? How should one play it?
In the last few years, we've seen that if you pick the right theme, everything becomes a beneficiary. I mean, we've seen this repeatedly in various themes in the market. I remember when the 2020-21 chemicals rally was playing out, everything became a 4x, 5x, some became a 10x. So if you just get the theme right, then honestly, it's not so much hard work. And I think the entire PSU space, including energy, which seems to have broken out in the last couple of days, and there is a bit of an overlapping. If you look at the fact sheet of the energy index and the PSU index, you will see that there is a lot of overlapping in stocks. But I think this entire segment looks good also because geopolitics is not done with. We are obviously hearing the US-Iran factor that seems to be playing out. And when I look at the chart of NYMEX crude, I'm tempted to believe that there is a potential 15% rally coming for crude. And if that were to happen, some of these energy and oil related stocks will do well. So that could probably be the thesis for energy and PSU doing well.
So what's the stack looking like for energy? One is reading good moves on NTPC as well off late. Of course, Oil India, ONGC, these are stocks which have seen remarkable moves off late. But what's your preferred list, Gautam?
That's the preferred list. Okay. I think the sector and the stocks that you mentioned, I think these are the big boys. This is not a market where you can be adventurous with small cap. I see a lot of people, trying to pick a bottom in small caps and micro caps. The big boys have saved you in the last 1 year. SBI at 1220 has saved you, but not the typical micro cap or small cap, which a lot of money managers keep talking about. I see the market environment has changed completely. For the first time in 20 years, India is not in the global equity party. Now, for how long this continues, I do not know because the charts are quite disrupted. But I think some of the top energy and PSU names clearly stand out for me. And honestly, I don't want to put a target to it. I just know the trajectory. I just want to stay committed. When the charts change, we change our view. Till then, just hang on.
But at 1200, is SBI still a buy, Gautam?
Why not? I think in every valuation metrics, and if you think that it's a proxy to the India story, definitely. I mean, no recommendation here, just an observation. It's something that we've liked for the last couple of years. And I do believe even from here, it will outperform every single private bank over the next year and a half.
SBI, yes. But do you broaden your pool within banks? Do you go to the tier 2, tier 3 level PSU banks as well? Or do you just stick with SBI?
Yeah, so if SBI is reasonable on valuations, many of the tier 2 PSU banks are far more reasonable on valuations. That's the good part. So if you look at the top names like PNB, Union Bank, BOB, Bank of Maharashtra, they've pretty much moved in tandem with the entire, PSU banking rally. And it's here to stay because I think it's getting parabolic. They've done well in the difficult times. And if the Nifty were to stabilize and at some point of time start trading above 26,000, I think they will do bigger things. So I don't think this is the best of the PSU banking rally as yet.
Okay, Gautam, thank you so much for joining us this morning, taking our time, giving us that perspective. Much required, of course.